All right, so let's begin the week with Meet Your Fund Manager segment, where today we focus on large and mid-cap category. And for that, we are joined by Harsha Upadhyaya, CIO, Equity, Kotak AMC, who will talk to us about Kotak Equity Opportunity Fund and decipher the market moves going ahead. Harsha, good evening and welcome to the Money Show. And before we talk about the large and mid-cap fund, which you have, let's try and get your understanding of the current market movement. How is the market looking to you, talking about few quarters down the line?
Quite bullish from an undertone perspective, I would say. However, for the past 2 months, we have seen some red flags emerging as well as foreign liquidity turning negative. For the month of September and up until now in October, we have seen foreign institutional investors selling about $3 billion worth of Indian equities. We have also seen crude oil moving up beyond $90 per barrel level. And monsoon, which ended the season with a deficiencies of about 6% or so, is also a red flag. So all in all, from a medium to long term perspective, we still continue to be quite positive on India from a both earnings perspective as well as how markets are expected to behave. However, in the very short term, given the kind of strong performance that we have seen and some reversal in flows as well as some red flags that I mentioned, probably markets would kind of show some weakness or consolidate at around current levels is what we think. But for a medium to long term investor, I think the market is still giving you opportunities.
So there are more growth opportunities for a medium-term outlook. But then, Harsha, let's also get your understanding on quarter results.
We have seen about one third of Nifty basket announcing results for the September quarter as of now. And up until now, we have seen quite a strong set of numbers from most of the segments, I would say. Actually, if you look at one third of the companies that have announced results in the Nifty basket, we have seen about 4 to 4.5% beat on the PAT numbers. So to that extent, at least in the initial a few weeks of result season, we have seen a good set of numbers. Hopefully, we will end the season as well in the similar zone. However, a word of caution is the crude oil movement that we have seen from $70 to $90 per barrel has happened during the September quarter or during the early part of October. So to that extent, probably the impact on the margins you would see only going forward. So that's a bit of a caution.
Harsha, let's talk about Kotak Equity Opportunity Fund, where you have exposure specifically to large and mid-cap. It's a large and mid-cap category fund. I want to understand right now the valuations which you are feeling around large cap. Do you think those valuations are really comfortable, and mid-caps, do they have any more steam left? What's your take?
If you look at valuations, overall market valuations are more or less around fair value of valuations. That's mostly driven by how large caps are quoting in terms of valuations. We are quite comfortable with large cap valuations, I would say. And also, even if there is some bit of margin contraction, the impact on the large cap basket would be much lower. So to that extent, definitely the comfort is more on the large cap basket. However, if you look at mid cap basket, the entire basket is trading at a valuation which is one of the highest that we have seen in history, as well as it's at almost 30% premium to large caps. So to that extent, although the earnings expectations are much higher in the mid-cap basket, I would say that most of that positiveness is also discounted in terms of valuations. So I would say if at all markets goes into a correction mode or into a decline, probably you will see more downside volatility on the mid-cap side rather than large cap side. So to that extent, I would say a large cap on the mid-cap fund, which is a combination of large cap and a mid-cap basket, is probably a worthwhile investment option, given that you will get probably stability from large caps, even if there is some volatility in the short term. And also you participate in the India story to mid caps, which will always be more than 35% in the portfolio. So stability plus a potential kicker from mid caps is what you will get from this fund.
Harsha, let's also focus on the sectors that you are, the exposure that you have in your fund also, talking about specifically large and mid-cap. What the sector space so far that is an exposure you have in the fund and why?
the fund is focused mostly on domestic businesses where we believe the growth rates are going to be much better as compared to some of the global facing businesses. So industrials, auto, cement, these are some of the pockets where the fund has been overweight on. While banking and financials is also a large exposure, but currently it's an underweight. And most of that underweight is coming from the non-lending businesses or the NBFC segment where we see more headwinds as compared to the banks where they could probably still manage their cost of funding as compared to NBFCs.
Harsha, if we take a view of maybe 2 to 3 quarters, what are the sectors that maybe are on your radar now and are expected to be a part of the fund also?
Very difficult to guess what kind of changes or what kind of sectors would occupy the fund going forward. While currently we continue to remain very positive on some of the overweight positions that we have, but it all depends on how the markets would behave over the next couple of quarters, both in terms of fundamentals as well as in terms of performance. And depending on the relative growth and valuation outlook, we would probably be looking at increasing or decreasing our large and mid-cap mix or changing our sectoral outlook. Currently, if you look at the portfolio is slightly tilted towards large caps. Large caps are more than 50% in the portfolio. Mid caps are at around 37-38%, and about 7-8% is also into small cap stocks. And the sectoral overweights that I have already mentioned, and they continue to occupy a large part of the portfolio. But what happens going forward would be a combination of factors that I mentioned. So to that extent, we'll have to keep looking at opportunities as well as the valuations around those opportunities.
Harsha, let's also talk about the domestic triggers in the trajectory, on the economy front. What, according to you, are the red flags that you see as far as our domestic movement is concerned? Do you think the international headwinds would be something that will impact our markets and our economy?
See, whenever we have seen crude oil moving towards that $100 per barrel mark, we have seen some adverse impact on the economy as well as some adverse impact on the corporate profitability margins. This is what we have seen in the history. And we would like to believe that that's likely to happen even now if crude were to move up to those levels. And already we have seen a very, very sharp move from about $70 per barrel to about $90 per barrel. So this is going to have some lagged impact on the profitability margins. At the same time, we have also had a deficient monsoon, which means that some of the segments which are closely linked to monsoon may also see a little bit of subdued volume growth or demand conditions. Both putting together, you would see a little bit of impact in terms of the earnings trajectory over the next 1 or 2 quarters whenever the lagged impact starts to surface. So to that extent, I would say that, yes, I mean, there is a bit of a concern in terms of earnings trajectory. But for a medium to long-term investor, I don't think that's a big concern because India is still expected to do very, very significantly strong numbers on the earnings growth trajectory for the next 3 to 5 years.
Harsha, last question. How an investor should be placing themselves on a portfolio level as far as exposure to large and mid-cap is concerned? Time to rebalance?
I would say that we have been suggesting investors to be a little bit cautious on the mid caps and the small caps for a couple of quarters now. And this is a fund which would take a position in mid caps to some extent. However, given the fact that there is going to be a tilt towards large caps, at least in the interim, probably it will also give you cushion in case there is higher market volatility. And overall, we still believe that India is going to see a very, very handsome earnings growth. So assuming that you are a medium to long-term investor, you enter in a disciplined manner on a staggered basis, I think large and mid-cap fund is a good allocation that you can make in your portfolio. And it should give you stability of large caps and also potential kicker from mid caps with a reasonable control on the volatility overall.
All right, that will be all. Thank you so much, Harsha Upadhyaya, for being on the show today and helping our viewers navigate their large and mid-cap exposure strategy and also giving us details on Kotak Equity Opportunity Fund. Thank you so much. We will slip into a short break, but then post that, let's focus our conversation on systematic transfer plan. Now, you must have heard about it and you must have been doing STP, but then what are those technical aspects of getting the systematic transfer plan strategy right? Let's get all the details on this with Shweta Jain after this break. And before I slip into a break, I'm going to leave you with our WhatsApp number and our email ID where you can send us your mutual fund portfolio related queries. That's the WhatsApp number 8657974571. Email ID where you can reach out, the moneyshow@etnow.tv. See you after this break.